You think you're just buying, a good company serving a huge market like Alibaba, and you have to worry about all these other forces. How do you approach it right now? J.P. Morgan earlier in the week said it's an uninvestable area. Do you agree with that?
It was interesting. I think they came out with that Tuesday, right? And then the stock, jumped 35%. So you're always got to be skeptical of the sell side. I don't know. It's really hard right now. I think if you look, Alibaba, I think now is trading like at 10 times next year's earnings, and Tencent maybe like, mid-teens next year's earnings. They're certainly cheap. I think before the bump too, take a third off those stock prices. If you buy stocks at 7 times earnings for stuff that grows fast, you tend to make money. I don't think China is invading Taiwan anytime soon. But what the heck do I know? I'm not a macro economist. I'm not everything that I don't know, but like they sure are cheap from a risk-adjusted reward if you have a long time period, I think.
What about and this goes back to the very beginning from Alibaba's IPO, the questions of what a U.S. investor even owns when you buy a share of Alibaba, right? You kind of own a piece of an entity that sort of has a claim on the earnings of the mainland company. Does that concern you, or how do you navigate around that?
Yeah, the structure of all of these things and these offshore entities, I'm not worried about that at all. And by the way, it's not only Alibaba; it's every one of these Chinese listed ADRs. And look, we own a bunch of Alibaba stock. I do personally on the fund, both you can own them in Hong Kong or you can own them in the ADR, and it's like remarkably easy to actually convert your ADR shares into Hong Kong shares. And most of these Chinese big internet companies are now dual listed in Hong Kong.